that's interesting. Now, it is time to get started. Almost time to get started. Microphone position just right. We can get started here in a little bit. It is about that time of day. Get my phone, turn it off. One more minute. Alrighty. Ladies and gentlemen, it is the 9 o'clock hour on Thursday. Let's bring this up. Oh, almost 8:59 and counting down. Ooh, do we really need to wait till 9 o'clock exactly? I don't know. Oh, let's figure it out. Let's turn the phone down so we're not interrupted. Booyah! There you go. 5, 4, 3, 2, 1. Huh? All right. Ladies and gentlemen, here we are, 9 p.m. Thursday, January 26, 2017. Thursday is one of my favorite days. And pretty soon we're going to change it up a little bit because I'm finding out that Thursday, it doesn't give you much time to make any trades except for, doing trades for tomorrow. And can you really profit on a one-day trade? Sure you can. I'm going to show you in a little bit. Anyway, this is James coming to you from the 10-Minute Trader. I'm going to show you how to invest in dividend stocks in order to get monthly cash flow. We're trying to show you there are other ways of investing your money. I mean, you work hard for your money, and I should probably slow down from my talking. I'm from up north, up in New England area, and up there we all talk fast. But to communicate better with people from all over the U.S. and all over the world, I need to start talking a little slower to communicate more effectively. So, let me restate. It's 9 p.m. Thursday, January 26th, 2017. My name's James Gardino. We're here on the 10-Minute Trader to show you how to invest alternatively in safe dividend stocks in order for you to make a higher rate of return safely using qualified, blue chip stocks, dividend kings, dividend aristocrats, dividend champions, companies that have consistently increased their dividend payments to their shareholders on a yearly basis, every year, for a minimum of 25 years. Those are the companies we basically want to look at and what we want to invest in. So with that being said, let's just jump right in and see what we're looking at. If you've been following me for the past couple of weeks, ever since the beginning of the year, you've noticed I've got this cough. It just won't seem to go away. So, get my other computer running. I got another computer right over here. I run two computers at once so I can see who's talking to me, who wants to ask questions, and give you my attention the best I possibly can. So let's get out of here. Let's get out of there. And let's jump into the two trading accounts. Now, I have two trading accounts that I like to show people that what's going on. They both rotate or revolve around dividend stock, investing in dividend stock companies. Why? Because it's the only ones I found that have good, strong background. An absolute worst case scenario you don't mind owning and keeping because it allows you to collect dividends on a yearly basis if the stock market goes south. Now, I say that a lot of people don't quite understand what it means, but if you're investing in a company, you're investing your hard-earned money, you want a return for your money. You want to invest your money to make sure that you have some kind of return coming back to you. So absolute worst case scenario, which happened in 2008, happened in 2000, happened in 2002, happened plenty of times over the years, where the stock market just crashes, tumbles, big correction, whatever you want to call it, makes a big move in the south direction, so it looks like you're losing your money. However, if you don't sell for less than you paid for it, you never actually lose anything. So with dividend stocks, and the reason why we basically concentrate on dividend stocks is that we want a consistent cash flow regardless of what's happening. So we diversify your money, scatter it around a little bit. Worst case scenario, you get a check every quarter, every 90 days. Or if you have it diversified really well, you get a check every month or every couple of weeks, which is what we're trying to do. Now, we invest in dividend stocks that show certain movement at certain times of the year in order for us to capitalize on collecting dividends. What do I mean by that? Okay, so with 3,500 companies paying dividends this year, every single day, and I'm going to show you that right here, every single day, there are literally dozens of companies that pay dividends. Now, let's go to Market Watch. No, not this account. This account doesn't have really good, it's the exact same company, but it's just for some strange reason, it doesn't have, the way the account is set up, it doesn't allow me to look way into the future what I want to do. Okay, so today is the 26th of January. Okay, January 2017, the 26th. So 5 days, 5 trading days from today would be February 2nd. 10 trading days from today would be February 9th. Okay, so here are the companies on the week of February the 9th that are trading. 25 companies on Monday, 23 companies on Tuesday, 34 companies on Wednesday, 9 companies on Thursday, and 7 companies on Friday. So if you add them up real quick, that's 50, 20, 48, 52, 82, 91, 98. 98 companies paying out dividends this week alone. That's like 5 trading days and 98 companies. So how do you decide which is the right companies for you to invest in? It's a simple question. Now tomorrow, like I said, is the 24th. So if we want to get into a company, we want to look 10 days prior to the EX date. And that would be tomorrow. So it would be 7 companies that we're looking at that are going to pay their EX date in 10 trading days. Okay, so what we would do, we would take these 7 companies, and it would be really nice if I could just cut and paste, copy paste all these, but Thinkorswim doesn't allow you to extract those, or if they do, I haven't figured it out yet. Okay, so to be honest with you, no, I don't know how to use this software that they have here. I don't know how to click and paste and cut and get those out of there, so I have to do it one at a time. So you have WEC and LNN. So let's go this software right here. Put in WCC and LNN. What else do we get? WEC and PCAR MSA. PCAR MSA. PCAR. That doesn't always work that way. PCAR. Let's go back to here because this is supposed to be WEC. LNN. Is that right? That doesn't look right. WEC, LNN, PCAR, MSA, HBI. HBI. What was that other one? See, it's got a short memory here. MSA. MSAINN. And what was the last one? I'm sure some of you guys know what the last one is. You probably get better retention than I do. Okay, SPB. SPB. And we're going to hit go. Now this, you should, if you're a member of our group, then you have access to the software. This goes through a mountain of data and finds out how many dividends this company has paid over the last 10 years. Now let's go down quickly and look at some of these. Let's get this a little bit smaller so we get that all into one screen. Okay, so WEC, I like that one right off the bat. That one looks pretty. Do you know why? has a whole bunch of ones. What does that mean? You're usually in and out on the same day. Okay, the stock closed at 58. The high for the year was 66.10. The low for the year was 53.66. And it has a 1-year target of 61.32. Like that. The dividend is almost 50 cents. If we bought it and held on to it for the whole year, we get a yield of 3.56. Now, I don't want to hold on to it for the whole year. I want to buy it. I want to grab that 49 cents, and I want to get on out of town. If I get 49 cents in one day, it doesn't sound like a lot of money, and it's not a lot of money. See, if I buy 5 shares, that's $2.50. It's not worth my time, not worth my effort. But if I buy 1,000 shares or 10,000 shares, you multiply that by the 49 cents, then it makes it worthwhile. So, granted, you can start investing with small amounts of money and slowly build up. But the more money you have, the more money you make. It's just the way it is. Okay, so the software breaks down and tells you how well it performed over the last 10 years. 2008 it did that, 2009 did that, blah, 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 all the way down. There's nothing here on 2017 only because 2017 hasn't gotten here yet. The first thing I want to do is I want to look at the chart on Yahoo Finance. Now, Yahoo Finance, click on that little button right there, and that brings you right to the Yahoo Finance, and it gives you the 10-year performance, how the stock performed over the last 10 years. So 10 years ago, the WEC Energy Group was at 28.50. Oh, sorry, that's 23.58. So 23.58 10 years ago, and look at this thing goes sideways. The chart goes sideways for a few years, and right around August of 2009, the slow, steady uptrend, and she just keeps on going. Nice, steady uptrend to right where we are today at 58.28. So that's more than 100% increase over the last 10 years in the stock price. That's just the stock price. Now remember, this company is going to be paying you dividends every 90 days. Okay, so every 90 days you get a dividend. So it would be a nice company to buy and hold. But that's not what we're going to do with it. We're going to buy it, we're going to collect the dividend, and we're going to get out. We're actually not even going to collect the dividend. We're just going to collect the dividends equivalents. Now the dividend is going to be like 50 cents. So I just want to grab that 50 cents and get on out. So let's jump on over to this other piece of software that I came up with. Is that it? That's not it. That's not it. There it is right here. Okay. WEC, again, you can get this at the, hold on, in the members area. So if you're a member of our, if you're our paid subscribers, you get actually access to the software, which will allow you to pick and choose. Okay, we're looking at the 9th. That's when it's paying this dividend. And let's plot a chart. Now I'm going to explain to you what we're looking at here. Okay, here's what we looked at just a minute ago. All ones. Gotta love that. Now, right here, somebody once told me it looks like a bowl of spaghetti. All these lines back here, don't know what they all mean. First thing I want to do is I want to click on my icon print on the average button. Click that. That gets rid of the the blue, the dark blue lines. Okay, what we're looking at here, that lime green line, is the average. The average movement over the last 10 years. Okay, you got 2016, 2015, 2014, 13, 12, 11, 10, all the way down to 2017. Okay, this is how the stock reacts. If you click on any one of these, the line lights up. Okay, that's what 2007 looked like. 2008 looked like this. 2009 like this. So on and so forth. You just put your cursor over there, click on it. So the software actually takes all 10 years, puts it on top of each other with some interesting mathematical calculations, and it gives you the average movement. So these red dots represent the EX date. Okay, so the EX date is what it is. So we wanted to make sure all 10 years focused on to the EX date to see how the stock performed 10 days prior to the EX date. So if we move the cursor over to the right, over to the left, that will give me 10 days prior to. Now, 10 days prior to the EX date is when I'd like to get in, because doing this for all these years, I found out the best time to get in is 10 days prior. Okay, so 10 days prior, We get in, and this stock has a tendency to move up for 5 days before she drops down a little bit and goes up, goes down, goes up, goes down. But then she goes up and goes sideways for the most part of the year. But that's not what I'm looking for. What I'm looking for is how long it takes to hit 100% of the dividend. And over the last 10 years, you're usually in and out in one day. So this one, I'm actually going to trade today. Okay, so you can stay and watch me do this one. That software, so far I showed you 3 pieces of software for this one stock that showed it looked good. Okay, so this one, so the first 5 days she goes up, and she goes sideways for quite a while. All right, dips down a little bit, but she's usually in and out and usually makes our money within the first 2 days. That's what I'm looking for. If I can get more money, great. But remember, I love my son for giving me this cold. Whatever you do, you can buy the stock, hold on to it all year round, and make your, what is it, 3.5% yield. If you're happy with that, great. But if you want more return on your money safely, okay, buy the stock, capture the dividend, resell it for a profit, and then move on to the next company. Now, I'm not telling you to buy this one. I'm just telling you that I'm going to. I'm going to actually show you how I do it because I like those numbers. I'm going to go sign into my other computer here for a second so I can follow along with whoever is out there asking questions. See, there's always somebody asking a question about something. Someday soon it will be gone. It will be. Anyway, because you can't hold on to a cold forever. Okay, so we looked at 3 pieces of software. 3 pieces of software say this is what we're gonna do. So let's just jump on over to this one. And we're gonna trade WEC. WEC. Oh, okay. WEC. And there we go. And we're going to go WEC on the 1-year chart here from Thinkorswim. And I'm going to give you a quick little rundown of what I see while this one is getting ready. My channel. There we go. Okay, so we're looking at the 1-year chart for WEC. It starts off last year at 53.17. Okay, that's the low for the year. A nice steady up move all the way up to make the high of the year, 1st of July, of 65.55. From there, she goes sideways for about a month, and then a slow decrease back down, hits another low right around November 10th. So at November 10th, she hits another low of 53.83. Comes up a little bit to end out the year at 58.45, and since then she's been going sideways to end up where we are today at 58.28. Okay, so 58.28 is where we are. And now we're going to open up our calculator to see how many of these shares we can get. All right, where's my calculator? These things aren't easy to find sometimes. I really dislike Windows 8. Wait a second, Windows 10. Sorry about that. Okay, and we want to divide it by the stock price. Stock price, it closed at 58.28. 58.28. And that'll give us an idea of how many shares we can buy. 850 shares. I like to round it off to the nearest 100. So that's 900 shares. So let's go do 900 shares of WEC. I'll go to custom buy. Slide down. And I said 900 shares. So let's go 900. And 900. So buying, selling 900 is triggered by 2.5%. Market and off to the races. All right, so buy 900 shares of WEC at the market to open. So first thing tomorrow morning, right around 9:31, we're going to buy 900 shares. Now, at 9:31 and 2 seconds, we are going to sell 900 shares of WEC, triggered by the first trade plus 2.5% return. So I want to get a 2.5% return and sell it. I might get out the same day. I might not. I don't know. That's with this one. And there you go. All right, so that order's done with that software. That software is basically showing us just the dividend equivalents. No, wait a minute, that's not the dividend equivalents. That is the dividend capture, dividend on steroids strategy, where you buy 10 days before, try sell it for 2.5% over what you paid for it. Now we want to do the options, which is the other trading account. Trade WEC. I have no money to trade because I have all my money tied up. Do I? Yes, I do. Look over here. 24, 16, 32, 24. Yeah. So I'm all tied up. I get negative $900. Oh, that's not good. Okay, so let's go back to the other. No, I really can't do that. Well, let's see what it's going to do anyway. Trade WEC. WEC there. Okay, so WEC doesn't have weekly options. It has monthly options. So we can look at a spread, which could easily be 58.28. So that would be the 55.60 or the 50.55. The 50.55 would be going for $5. So there's actually no money to be made there. So the 55.60, that's a little tough because you're actually at the money. At the money is a tough one because it has to go above 60 to actually make you most money. So we can get rid of that one. Let's do, there you go, 50.55 put credit spread. Now what does that mean? That means put credit spread, we're actually gaining money at first. Someone's paying us 25 cents to buy WEC at 55. So right now it's 58.28. So do I want to buy it at 55? Sure, why not? But I don't think I can because I think all my money's tied up, and we get out of all our positions tomorrow anyway. Buying effect negative 4,500. Hey, it's rejected. Of course it's rejected. I hate that beeping noise right in my ear. Okay, so we're not going to be able to do that one. So if you guys wanted to do that, let's go back and do that trade again to see exactly what kind of return you can get on that one. So if I was going to sell the put credit spread, okay, the 55.50, it would be costing me $4,700, and I'd be making $220 off of that. That's not really worth it because you're putting yourself into a strange position. Okay, so that's okay. I think I can deal with that one. Okay, nobody got any questions for me yet, so let's got some questions. I hate when that happens. All right. That one doesn't look so hot, but let's take a look at this one right here. Get out of there. Now, the 55.60 put credit spread, you'd be gaining $2.20, but you'd have to buy it at 60, and right now it's below 60. And look at the chart over here. Okay, this is like a 2-month chart that we're actually looking at. The highest it made in the last 2 months is 59.62. So do I really think this thing's going to go over 60? Do I want to buy it at 60? All right, so if we go back to the 1-year chart, She actually hit a high in July, the first week of July, at 65.81. So could she back up and go back up to over 60? Of course she could. I mean, she hit 60. She went down a little bit sideways, slides down, and she settled down here at the bottom and right around election day at 54.04. That's where she is now. She's moving up, and she hit a high in the last couple of weeks of 59.45, and now she's just going sideways. So as good as it looks, and it is much fun as it may be to get into this one, I'm going to have to pass on this one for a couple of reasons. Reason number one, oh, my money's tied up. So I'm going to show you where my money's tied up in a little bit, but I wanted to show you this trade right here. Now you have to be okay with getting WEC at $60 because 22 days, which is about a month away, because there's 5 trading days per week. 22 trading days is about 4 weeks. So 4 weeks from today, or 4 weeks from tomorrow, this option will be expiring. So is this thing going to go above 60 in the next 4 weeks? You know, that's a bet that I'd probably take that one. I mean, because like I said, the charts look great. All the 3 pieces of software say, sure, why not? Okay, so that's 2 trades I just showed you. One was the dividends on steroids. One is the put credit spread. Okay. Next, I'm going to show you the dividend equivalents. So let's do that one. So let's trade. Let's get out of that. Delete that order. Okay, here's where we click on the ask price. This drop down pops up. Now there's a video on our homepage, not our homepage, but the members area that shows you how to set up your trading to actually do this kind of a trade. So you right click on the buy custom, and the drop down button opens up, and if you by mistake hit this one here, it almost looks the exact same. However, you're selling rather than buying. So you got to make sure you come through and you buy that there. And I want to go to this one. Now we said 900 shares, right? 900 and 900. Okay, so what we're looking at is buying is going to be on the top. Now, if this was a sell order, the sell would be on top. So make sure you get the buy order on top. All right, so we're buying 900 shares of WEC, the stock, at the market price, okay, for the day. So we're putting it on now. So first thing in the morning, that trade's going to kick in. Okay, so you're going to have first thing in the morning, 900 shares at 9:31. That order is going to fill, whatever the market is. Okay, so like 2 or 3 seconds after the market fills that order, the sell order is going to kick in. Okay, it's going to be triggered by the first trade, and then you're going to add, let's change this because the dividend is 49 cents. Okay, 49-cent limit, good till cancel. And then you hit confirm, and just read back again before you hit send. Buy 900 WEC at the market to open, and sell 900 WEC triggered by an extra 49 cents, limit order, good till cancel, triggered by first order. Okay, how much did it cost me to make this trade? Got $52,000. It's cost me $10 in commissions, so it would be $52,461.95. And how much am I going to make out of that? What is 49 cents times 900 shares? All right, clear. 900 shares multiply 49 cents equals $441. It'd be nice if I get that for tomorrow. Now, worst case scenario, like I said, I buy the stock, hold on to it, and just end up collecting the dividend. So over and over and over again, I just collect the dividend over and over and over again, 49 cents every 90 days for however many shares. That's $440. Granted, it's not a lot of money, but you pump it up a little bit, and you put $500,000 into it, that's $4,000 every 90 days. Anyway, it's a 3.5% return on your money. So let's go back and do another example. Let's go. And what was the next company we were looking at? Okay, so we like WEC because all these numbers looked good and the chart looked good. Now INN, that's not bad. 1, 1, 1, 1, 1, except for 2014, it was an 8. Now here we have a minor problem with the numbers. Now getting in and getting the dividend is great, but we're looking at a close of 78.82. Okay, that's no big deal. The high for the year was 89.98. Okay, that's not bad. The low for the year was 65.44. Here's where we come into a little bit of an issue. Okay, analysts are projecting this thing to be at $76 in a year. Now, don't get me wrong, it may be a great company, but if they're projecting it going from 78, almost 79, down to 76, I'm going to say no thanks. Okay, here's a couple other reasons. The yield is 1.5. Okay, that's just a little bit above CD. And here's another one. 100,000 shares traded. Not enough. So I'm going to give this the old boot. See you later. Okay, so PCAR. Okay, I don't like here in 2011. She didn't hit dividend at all. That I don't like. Okay, a 60-cent yield, 60-cent dividend. The yield is 1.4. All right, another one. It closed at 68.40. Has a one-year projection of 66. That's a couple things going against it. Low yield. The one-year target's off, and it missed its dividend in 2011. Okay, HBI. Only 3 years of paying dividends. It's 11 cents, and it's only 1.9. I don't like to do anything unless it's 2% or higher. All right, INN, it's missing a bunch of dividends, so no to that. And SPB is missing a bunch of dividends also, so no to that. So MSA is a slight possibility. Let's take a look at some of the numbers. It closed at 71. The high was 73. The low was 39 for the year. It's a one-year target of $60.50. Ouch, that hurts. That hurts just saying it. Oh my goodness. And the volume, 166,000 shares traded. Sorry. Nope. So for tomorrow, there's only one clear choice. And the nice thing about WEC, you got 4 pieces of software all saying the same thing. It looks good. So we're looking good at WEC. Now, today, the companies we were looking at are, let's get out of there. Let's go back to here. Today, we only had 9 companies to look at. KGRO, SIMO, HP. Here we go. Just click right here. Oshkosh Corporation. They make those overalls. National Instruments. Granger. That's a good company. Look at that. Paying $1.22 dividend. That's great. GRO. Gold Resource Corporation. Okay, they're paying 1/10 of a cent. Okay, that's a perfect example of, sorry, no thank you, not worth my time. Not unless you had a couple billion shares of that one. Okay, CORR, Core Energy Infrastructure Trust, paying a 75-cent dividend. All right, TSBK is Timberland Bank Corp. HP is, it's not, a lot of people think it's Hewlett Packard, but it's not. It's Helmerich and Payne Incorporated, paying a 70-cent dividend. SIMO is Silicon Motion Technology Corporation. Never heard of them, but they're paying a 20-cent dividend. And look at this. GRO, U.S. Global Investors. Okay, they're paying 2/100ths or 2/10ths of a cent. That ain't worth it. Okay, so that's 2 of them, not even worth doing. GRO and Goro. Both of those not worth doing. But the other ones, if you're a member of the, if you're a subscriber, go to the website, put stock symbols in, and see if they're worth trading. Do the homework. Check and see what the chart looks like. Check and see what the dividends look like. Check and see what the numbers are, because the numbers don't lie. If it's done what we want it to do over the last 10 years, there's a good indication that it's going to do the exact same thing again tomorrow, the next day. We're looking to get that dividend. For the fun of it, let's take a look at what actually happened today. So today is January 24th, and we have... No, today's not the 24th. Today's the 26th. What am I thinking? Okay, so today's the 26th. So 17 companies looking at. Now, today being the 26th, 10 days ago today would have been the 12th. So you would have gotten into these things on the 12th. No, wait a minute. 26th to 12th. Okay, so you would have gotten these on the 11th, got in at the 12th, and have been out yesterday. So you would have gotten in on the 11th. So the 11th is the number we're looking for. So let's take a look at some of these. Now, ALX, it makes me a little leery because they're paying $4.25. Something just ain't right there. ALX. Oh, that's why it's a $400 stock. Let me tell you right off the bat. No, I wouldn't do a $400 stock because I'm limited on my capital. Now, if I had millions of dollars, maybe I would. But CAG, I could do CAG. All right, CAG is a $38 stock. They're paying a 20-cent dividend right here. What is CAG? That is Conagra Brands. Sorry, never heard of them. Okay, so let's take a look at the chart, see what they've done for last year. Starts out the year last year at 28.85, makes a low at the beginning of February of 27.81. From there, over the next 4 months, nice steady uptick right to 37.67 right in July 5th. Goes sideways, a downward dip, hits another low right around September 21st. Has a nice gap up. September 21st, 32.32. Then she jumps up from 32.32 to 34.56. And then she steadily climbs to make the high of the year of 39.94. Okay, that was at the end of the year, December 29th. Drops back down for a couple of days. And actually, look at this. In a 1 month period, she had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 down days. And only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's a pretty significant amount of downs as opposed to the ups. Okay, so CAG, before I give you my opinion on this one, let's jump and look at the other software and see what CAG says. CAG, and go, and see what it looks like. Okay, CAG is not that bad. Okay, so let's review the numbers real quick. All right, so CAG looks like between a 4 and 7 day period of hold. I don't know, I guess for 20 cents, I'm not sure. Okay, closed at 39. The high for the year is 39.97. The low for the year is 29.76. It has a 1 year target of 41.33. That's not bad. The dividend's 20 cents. It's a 2% yield. Now, 2% yield is what I usually look for, or I like 2% or better. Okay? And it's 3.5 million shares being traded. So those numbers all look good. This chart looks good. I like this one. Let's see what the Yahoo Finance chart says. Jump on over there and take a look at what it looks like for the last 10 years, what the stock has done. Actually, I like it. It doesn't take long to take a quick look and see if you like it or not. 10 years ago, it was at 15.62, and today she's at 38.55. So that's more than 100% return in a 10-year period. So that makes me happy. I like that. Let's jump over here to the software here and see what this says. CAG, right? Wasn't that was a symbol? Okay, CAG, and let's plot the dividend. And that, okay. Well, let's find out why that's. Oh, that's why. That was for today. CAG on the 26th, and plot the dividend. There we go. We hit the average. Okay, so this stock is basically what you would call a sideways stock, because it basically goes sideways. Well, it is what it is. No big movements. But in the last 90 days, after the dividend, she moves up. So you can get into the dividend capture and get in and get out and make your money. Let's take a look at what it actually did, because remember, it paid its dividend. It did it. EX dividend date was today. So remember, we're going back to the 9th. Right, WEC to the no. Wrong one. Let's get out of there. CAG. Okay, so we're going to the 9th of January, because that was 10 days ago. Today was the 10th, so we only get out for the 10th day, so we would have gotten in on the 9th. Okay, so let's look at the 9th. Now, CAG is only paying 20 cents. And we look here, is the opening, is the high, the low, and the close. Now, here's the 9th, like we said. A 20-cent move for CAG. She opened up at 38.61. So our target would be 38.81. Is that correct? So 38.61 plus 20 cents is 38.81. Made a high of the day was 38.78. It's like 3 cents off. Okay, so you're in it on the 9th, 10th, nothing. The 11th, nothing. The 12th, you're out at 38.87. So you would have hit it on day 4. Okay, so that's not bad. So you make your 20 cents in 4 days. Not great, but hey, you're not in it for that. You're in it to make, the little movement. Because believe it or not, a little movement, 20 cents here, 20 cents there. You do it every week. You do it twice a week. Let's say you do it twice a week. You're gaining the dividend equivalents twice a week. So that number's ring up really quick. All right, so the next one is CLC, which is Clarecore Incorporated. 25 cents. It's for the fun of it, so I don't have to go through all this. CLC. Now we're looking at the 9th. I hate gap ups, really do. And when did it happen? It happened at the end of November. Let's go back and take a look at exactly what we're looking at. So the beginning of the year last year, CLC started out at 44.57. A nice uptrend for the first 2 months of the year. And she jumps up to 58.17, goes sideways for a couple of months. And then right around June 10th, starts incline, goes up, and hits about August 2nd. It's 65.68. Takes a little bit of profit taking right into Election Day. We talked about this last week. We even talked about this on Monday. Election Day, 11/8/2017. Wait a minute. 11/8/2016 is going to be one of those pivotal dates. A date where everything changes. The stocks move up or the stocks move down. It's kind of like, 2008, where everything dropped. 2008, 2009, everything was down in the tanks. 11/8/2016, right in that week, you're going to have stocks that go shoot up and stocks that went down. It's one or the other. Very, very, very few stocks will actually go sideways in that time frame when the new president came in. Okay, so anyway, we're at 11/8. She makes the low for that time frame, and then she jumps up on Election Day from 61.64. She jumps up $10. $10 on a $60 stock is about 12-13%. What makes me a little uncomfortable, at the end of November, November 30th, she settled at $70.18. Overnight, she jumps to $82.46. Why? That's something you might want to think about looking at. So from there, nothing but sideways. So let's go. And another gap up right here on January 18th. She went sideways from the beginning of the year. From the beginning of December, it goes sideways right into second week of January. She's at 82.49. Then another gap up to 82.93. Not a big gap, but it is a gap nonetheless. Now we said we were looking at the 9th. So what does the 9th tell us? Okay, here's the 9th right here. The 9th just so happens to be a down day. We're only looking for 25 cents. It is an $80 stock. She opened up at 82.35. So 82.35 and 25 is 82.60. Now it's a down day. Okay, so we're looking at an 82.60 as an exit. The high for the day was 82.40. Didn't make it on the first day. However, the very next day, she opens up at 82.34 and high of the day is 82.60. Now, there's no guarantee just because you have an exit of 82.60 that the high of the day you're going to get called out. Sometimes you do, sometimes you don't. It may have hit 82.60 for a fraction of a second and then drop back down again. You just don't know. So you may not have gotten out on the second day. The third day, although it was a down day, it hit a high of 82.61. So you're more likely to have gotten out on that day because you went over and above. So you're out in 3 days. Okay. COBZ was CoBiz Financial, 5-cent dividend. I don't know about you guys, but I don't bother chasing 5 cents. I just don't. Okay, so I'm not even going to look at that one. Dimple, DMPL, which is Dorchester Minerals. Okay, Dorchester Minerals is paying a 24-cent dividend. I'm not going to go into the other software because this has already happened. I mean, if you can actually invest your money rather than research or substantiate findings, yeah, go through all the exercise. Right now, I'm just showing you what actually happened. So I'm going to call them Dimple because DMPL looks like Dimple to me. DMPL. How about DMLP? DMLP. Okay, DMLP. And there she is. Now, DMLP, a very nice, lovely looking chart. Okay, she starts out the year last year at 972. Okay, 3 months, she goes sideways. From there, or March 3rd, from March 3rd, it's a nice steady going up, profit taking up, profit taking up, profit taking up, profit taking up to a high on December 21st of 1927. This was a $9 stock at the beginning of the year. At the end of the year, it's a $19 stock. That's over 100% increase in just 1 year. Okay, so the high of the year, December 21st, going sideways. Since then, looking for 24 cents on the 9th. Where is the 9th? Right there. Why is the 9th a down day? Every single stock so far was a down day on the 9th. Okay, the down day on the 9th, looking at 24 cents. $18 stock. She opens up at 18, high of 1803. Not on the first day. Not on the second day. What was the opening again? The opening was 18. So we're looking for an exit of 1824. Not the first day, not the second day, not the third day, fourth day. No. 5th day. There you go. Day 5. The high of the day was 1835. Okay, I like that. So you're up in 5 days. You made your little target price. FCCO, 9 cents. First Community Corporation. I don't bother chasing anything under 10 cents. So I'm going to pass on this one. If you guys did it, hey, great. If you didn't do it, more power to you. FIBK, another 24-cent stock, another 24-cent dividend. First Interstate Bank System. Let's give it a try, see what she says. FIBK. There you go. Another lovely looking chart. She begins the year last year at 25.30, goes sideways for a month or two, 25.80, and from the end of February, she goes sideways with a slight uptrend right into July at 27.70. From there, steady growth into November, right around the 8th. My goodness, why is everything around the 7th and 8th of November at 32.14? From there, within 2 months, she jumps from 32.14 to 43. That's almost a 30% move in 2 months, which is awesome. The high on December 29th, and from there she goes sideways. Here we are. Let's take a look at the 9th and see what she did. January 9th. There we go. Okay, so January 9th, we're looking at 24 cents for FIBK. She opened up at 41.45 and 19 cents on top of that. She actually out in the same day, 41.95. That's a 50-cent move. Okay, so that's almost a 200% move. Dividend move. Okay, so we were looking for 24 cents. We actually made, it actually went up 50 cents. So depending if you had a stop loss, or whether you had a stop limit, or whether you had a trailing stop, would let you have some kind of a clue of what you were looking at getting. Okay, I'm going to end right about now because it's at 10 minutes of 10. There's so many more to go through, but you saw what we're looking at. So you know how to use the software. You know how to use, hopefully you know how to use the Thinkorswim trading platform. You take the dividend stocks, put them into the software on the website, find out what's moving, when it's moving, and then do the research. Look at the 10-year chart on Yahoo Finance. You don't like Yahoo Finance? Use the 10-year chart on Google Finance. Use the 10-year chart on any financial website to find out the exact numbers, because the numbers are what they are. There's no smoke and mirrors. The opening for the day, on January 19th is the opening for the day on January 19th. There's no hiding it. I mean, any financial site or any financial website or any financial publication will tell you the opening on January 19th is this. This is what it is. So this software goes in, looks at the data from historical performance, and gives you a projection of what the stock actually did. So there's a good probability, if it did it every year for the last 10 years, that it might do it again. So that's the whole basis of the whole, that's the whole enchilada, so to speak. I'm looking to get little bits, 20 cents here, 40 cents there, 50 cents there. I just showed you 5 companies that are looking for a 24, 25 cent dividend. Okay, great, it's not a lot. But if you put in $50,000 and you're buying 900 shares, that's $400. Okay, so that's $400 a week, $400, twice a week. That's not bad. And that builds over and over and over again. So let me quick show you where we are. Let's go back to Market Watch. Okay, so the year started on January 3rd. Okay, the accounts get reset back to 0 on January 1st. So our profit to date, profit and loss year to date, is going to start off at 0. So where are we now on both accounts? Now this account here trades with options. We do the credit spreads, we do the debit spreads. We buy the stock, we sell a a call, which is called a covered call. So if I'm buying, let's say, TJ Maxx right here, TJX. Let's open it up, TJX. Okay, TJX closed today at 75. If I'm buying TJ Maxx at 75, let's go to TJX. Okay, so TJ Maxx, okay, closed at 75. So tomorrow morning, if I buy TJ Maxx at 75, I can turn around and sell someone the option to buy it from me at 75, the exact same amount of money I paid for it, and give me $1.10. It's right here. See, it says $1.10 premium. See, the February 17th, $75 strike price. I could buy it at 125, but I don't want to buy it at 125. I want to do a covered call. I want to buy the stock, sell the call, basically buying it for $75, and I'm selling it for $75. What do I make out of that? I make $1.10. That's what it shows right here. $1.10 for the privilege of someone to pay me the exact same money I paid for it. That is called a covered call. It's a very safe, strategy, and you're allowed to do that strategy in your IRA. Some of the other strategies you're not allowed to do in your IRA. So you have to ask your broker, what can I do, what can't I do in my IRA? If that's what